bank transactions and petty cash transactions, considering the double entry concept. So when you record bank transactions, first of all, let's start with determining what is the bank account. So the bank account is an asset. It's an asset because it is money that the company, the business activity already has. So it is definitely an asset. If we are starting from that point, if we are receiving money into the bank account, for instance, a customer is paying us and we receive a bank transfer or we receive a check, being the bank account an asset and increasing, we are going to record the bank account in debit. The other part of our registration will be the customer account. Or if there is no customer account, if we have received money for instance, some cash sales, then we will have a revenue. The other part, whether it's a revenue or is the customer account, will go in credit. But why? So say there is a customer receipt. The bank increases for the value of the receipt. So it goes in debit. The customer account decreases because they have already paid us. So for us, we've got less money that we will receive from this customer in the future. So a reduction of an asset goes in credit. If there is no customer account, then the other part will be a cash sale, for instance. That's a revenue. And revenue behaves like a liability. So increases in credit. Let's think about payments, bank payments, or supplier payments. So we are paying a supplier through our bank account. Our bank account is an asset. The value of the bank account will reduce because money is coming out of it. So that will go in credit. We are paying a supplier. Therefore, the supplier account is a liability. That liability is reducing because we have paid that supplier a certain amount. So in the future, we are going to pay the supplier less. And a liability reduces in debit. So we've got our bank account that goes in credit and the supplier account that goes in debit. But what if we are not paying a supplier? We're just paying for certain expenses. There is no supplier account. Again, the bank account will go in credit. It's reducing. It's an asset and it's reducing. The other is the travel expense or whichever other expense that you could pay. It's a cost. And cost increase and start in debit, like an asset. So you will have your bank account in credit and then the specific cost in debit. Remember, always for the same amount. Let's talk about petty cash. Petty cash is very similar to bank account. Petty cash account, it is an asset. It's the physical cash in hand that company business activities do have in case there are some emergency expenses that they have to cover for staff, for instance. So being an asset, if we are giving to our staff some vouchers, for instance, some lunch vouchers, so we are paying them lunches or travel expenses through our cash in hand, our petty cash account. What will mean in accounting? The petty cash account is an asset, so if we reduce this, because we are reducing the amount of physical money that we've got, that will go in credit. The other part, which is a cost, travel, subsistence, that will go in debit. What if we are increasing the amount of petty cash, so cash in hand available? That will be a complete opposite transaction, recording. our petty cash account, which is an asset, because it increases, it goes in debit. And the other part, which usually is, for instance, capital coming from the business owner, will go in credit, because capital accounts, they do behave like liabilities. So they do increase, or they do increase in credit and decrease in debit. So in this case, say that a business owner is paying some capital into the petty cash account. The petty cash account increases in debit, and the petty cash account increases in debit, and the capital account increases in credit, because we are recording some capital coming in, increasing in credit, capital account like a liability. Petty cash, it is an asset, increases in debit. So again, we've got the debit, the credit, they do match, and it's the same amount. So this is how you effectively record bank transactions and petty cash transactions in Sage, but also in other accounting softwares, considering the double entry.